Bitcoin in 2025. Boom or bust? In today's video, we'll uncover whether Bitcoin is still a good investment, what's driving the market, and the risks you should know before making a move. Let's dive in. Bitcoin went from being worth pennies to hitting an all-time high of nearly $69,000 in 2021. But what about now? Is the hype over, or is there still potential? To analyze Bitcoin as an investment in 2025, it's helpful to compare it to a traditional store of value that is gold. Both assets are often discussed as hedges against inflation and economic uncertainty. However, their performance, adoption, and characteristics differ significantly over the years. Before the comparison, let's understand in detail the journey of rise of the Bitcoin. Bitcoin, created in 2009, started with almost no value, trading at less than 1 cent in 2010. By 2025, it has become a trillion-dollar asset class at its peak, with a market cap currently hovering around significant levels. 2009 marked that start of Bitcoin at a fraction of a dollar. Bitcoin gained attention among tech enthusiasts and early adopters, crossing $1 in 2011. In 2013, Bitcoin experienced its first major bull run, reaching over $1,000. Increased awareness and early exchanges contributed to the surge. From 2013 to 2017, mass adoption led to Bitcoin's first global bull market, peaking near $20,000. Retail and institutional investors entered the space in larger numbers. In 2021, Bitcoin hits an all-time high of $69,000 before experiencing major corrections. From 2020 to 2021, Bitcoin surged during the pandemic, with institutions like Tesla and MicroStrategy adding it to their balance sheets. The peak of $69,000 in 2021 marked Bitcoin's all-time high. From 2022 to 2025, prices corrected sharply to $17,000 during market turmoil and crypto-specific crises like the FTX collapse. The dotted orange lines represent Bitcoin halving events, which occur every 4 years. Let's understand what the Bitcoin halving means. Bitcoin halving is a programmed event in the Bitcoin blockchain that occurs approximately every 4 years or every 210,000 blocks. During a halving, the reward miners receive for adding a new block to the blockchain is cut in half. This reduces the rate at which new Bitcoins are created, effectively slowing down the inflation of Bitcoin's supply. In 2020, block reward was 6.25 Bitcoin per block. After the 2025 halving, the reward has dropped to 3.125 Bitcoin per block. The final halving will occur around the year 2140, after which no new Bitcoins will be mined, reaching the total cap of 21 million BTC. Bitcoin's creator, Satoshi Nakamoto, designed halving to mimic the scarcity of precious metals like gold. By reducing supply over time, the protocol aims to ensure Bitcoin remains scarce and valuable in the long term. Gold, by contrast, has been a traditional safe haven for centuries. Its performance over the past decade reflects its stability, but lacks the exponential growth seen in Bitcoin. In 2010, gold trades around $1,400 per ounce, riding the momentum from the 2008 financial crisis. From 2012 to 2020, price fluctuates between $1,200 and $1,800, with a surge to $2,067 during the COVID-19 pandemic as investors sought safety. In 2025, gold remains steady, trading near historic highs but lacks the explosive growth potential of Bitcoin. In 2025, institutions continue to show interest in Bitcoin. Companies, hedge funds, and even governments are exploring Bitcoin for diversification and as a hedge against inflation. The rise in institutional-grade Bitcoin products, such as ETFs and custodial services, provides easier access and reduces risk for investors. Global economic uncertainty and inflationary pressures have driven investors to consider Bitcoin as digital gold. With its capped supply of 21 million coins, Bitcoin offers scarcity, making it a potential hedge against the devaluation of fiat currencies. Bitcoin's fourth halving has recently occurred, reducing the block reward miners receive. Historically, halving events have led to price surges due to reduced new supply entering the market. This scarcity dynamic might drive demand and increase prices. Bitcoin adoption in payment systems, remittances, and even DeFi, decentralized finance, continues to grow. Layer 2 solutions like the Lightning Network make Bitcoin faster and cheaper to use, enhancing its utility. The cryptocurrency market is more regulated and mature compared to earlier years. Clearer regulations in many jurisdictions provide investors with greater confidence. Furthermore, advanced trading tools and platforms enable better risk management. The cryptocurrency market is more regulated and mature compared to earlier years. Clearer regulations in many jurisdictions provide investors with greater confidence. Furthermore, advanced trading tools and platforms enable better risk management. Cryptocurrency adoption is growing worldwide, especially in regions with unstable currencies or limited access to traditional banking. Bitcoin's decentralized nature makes it a valuable tool for financial inclusion. Bitcoin's historical performance and cultural significance as the pioneer cryptocurrency continue to attract long-term believers and retail investors. Many see Bitcoin as a store of value, akin to gold, with significant upside potential. But let's not forget, Bitcoin isn't without risks. Regulatory crackdowns, volatility, and competition are all factors that could impact its future value. Do your own research and learn technical analysis. But don't solely rely on TA. In addition, understand the market sentiments, bull cycle, halving events. Analyze Bitcoin's role in a diversified portfolio. Use DCA, dollar cost averaging, as a strategy to mitigate risks. While crypto provides potential huge returns, but invest only 10% of your savings. If you're thinking about investing in Bitcoin, it's crucial to treat it as a high-risk, high-reward asset and avoid putting all your eggs in one basket. So, is Bitcoin still a good investment in 2025? The answer depends on your risk tolerance and investment goals. What do you think? Drop your thoughts in the comments below. Don't forget to like, subscribe, and hit the bell for more insights into the world of finance and investment.